Better than pay-per-click costs, social media ads, or big referral fees to the portals out there. Let's learn how to win with Google local services. What's happening? I'm JC Agajanian, broker associate with the Whistle Realty Group, bringing you the recap of the Monday morning mastermind that the Fast Forward movement puts on every week. And today we've got three great topics we are covering. First of all, we're discussing how to win with Google local service ads, which is different than traditional Google pay-per-click ads. We're also going to talk about using creative financing to land listings, something a little bit different. And of course, we're going to wrap up our conversation today with the benefits of HighNote. It's a great tool if you haven't used it before. We're going to learn how to leverage it to increase your conversion rate. So let's get straight into our first topic of the day, winning with Google local service ads. And like I said before, this is a little bit of a different category on the Google webpage. When you type up local realtor or listing agent in San Diego, you're going to have a few local people provided before you get down to the paid advertising, which comes then before the organic searches that you've actually looked for. So there's two layers of advertising in Google nowadays, and one of them is this local service ads. And what it's doing is pulling from your Google My Business page and presenting to the person doing the searching a way to either message or call directly. In most cases, it's a live call that is transferred over to you directly. So there's no lead funnels, there's no portals for people to land into and submit their information. It's just a phone call, and they've looked at your Google My Business page and deemed that you've got enough clout, experience, reviews, whatever it may be, to pick up the phone and give you a call and see if you can help them out. So first thing is you've got to register for the service. You've got to be willing to pay, I think it's around $40 per live phone transfer if and when those calls come through. So kind of like Google pay-per-click, you don't have to pay until the prospect takes action. So one of the first things that we discuss today is the importance of getting those phone calls answered, hopefully with 100% accuracy. Google doesn't want people going to their site, deciding to make a phone call to a prospective agent and then not get that phone call picked up. So it's hugely important that you either have a dedicated phone line that comes to you if you're a solo agent, or maybe a small team or group that you know cannot be ignored, or if you're a larger group, just have someone that you pay that does nothing but answer these phone calls. Sure, that person maybe can do other things as well, but that phone call, that hotline, has got to be a top priority. The other thing that is going to be hugely helpful in getting some of those conversions, getting people to click the button to call you instead of someone else, is your review count. We've all worked hard at getting our review count up on Zillow and probably Realtor and maybe Yelp and any of the other places that you want to be represented online, but Google My Business is hugely important if you want to consider these LSAs or local service ads as part of your strategy. Just like anything you've ever looked at online, one of the things a prospective buyer or seller is going to do is look at the stars and see how many people have reviewed them before they look at whether or not it's 3, 4, or 5 stars to begin with. So you're going to look at both when they come along, and for that reason, we really would love to have 80 to 100 reviews of our own on that Google My Business page if possible. It's going to make a huge difference when people decide who to click and call and who to talk to ultimately. Another thing that has come up is something to be a little bit aware of. Basically, I just received one of these myself recently, not through a LSA ad, but through another source. It's the scammers, and these days a lot of them are trying to talk to you exclusively on WhatsApp. These leads are crap. And actually with LSA, they're eligible for a refund from Google. But you need to be careful with how aggressive you want to be with pursuing these refunds. For example, if you get a renter lead that you thought was a buyer, or if you get a vendor who is maybe trying to reach out to you about a sale or something like that, and it's not going to be a fruitful lead for you, just gauge how worth it is to seek that reimbursement from Google, because obviously they don't like giving money back if they don't have to. But if it is truly a scam or some other obvious junk lead, they'll be happy to do it. Another recommendation we got for those who are actually using LSA and doing well with it is to really create a strong workflow around this lead platform. Make a weekly review to go through the leads that have come in and how you've interacted with them and which ones have potential to actually become a deal. And stay in contact with your rep regularly. You need to review these things and adjust accordingly. Another thing that will help with you getting that phone call through the LSA as opposed to another agent who's being presented on there as well is to not only have good reviews and a full-fledged complete bio and page built out, but also to be making posts to this Google business page just like you would any other social media site. What helps even more is adding geotags to the video and to the photos that you're uploading to the My Business page so that it will help Google know which areas you're working on and which areas you're going to be better to put in front of prospective sellers and buyers in that neighborhood. The conversation continued, but it seemed like some of the main points to hit were getting set up with a great page, making sure you have a good amount of reviews on your page, and maintaining it with regular posting and interaction with people on there. All of that is going to add to you all of that is going to add to hopefully you getting an unfair share of direct calls coming in from prospective clients in your neighborhood. So let's wrap that conversation there and pick up the one regarding creative financing and how we can use it to help us land listings. So this topic has become a lot more popular with the market that we've seen in the past year or so. With rates increasing, people have looked to alternate ways to help clients get into homes and sellers sell those homes. And alternative financing is nothing new, but it's something that wasn't really needed with the last rate environment that we had, some of the lowest mortgage rates we've seen in decades. And so with the new market comes creative thinking, and obviously one of those is creative financing. So it usually comes into play when maybe a buyer can't quite qualify for traditional financing or is really turned off by how expensive it would be to get traditional financing and would have to significantly compromise on that end product, the home that they're buying, in order to afford it. And so in markets like this, a lot of people have shifted gears and look to see if they can maybe get a lower rate supplied by seller financing, or possibly purchase the home subject to the seller leaving that current mortgage in place, taking responsibility for that, and on top of that, any additional payment that may be negotiated. A lot of sellers don't really understand how this can really be a benefit to them. Kind of seems like anything creative or different is negative in a lot of people's minds. And so they just tune it out immediately. But it's important if you want to try and be sure to open up all avenues for the sale of the home. This could especially come into play if you feel like the agreed upon list price is a little higher than the market will bear. Being open to a win-win solution between a potential buyer and seller is one way for them to actually accomplish their goal in an unusual method. Now, it's not all gravy though. There are some concerns to consider. One of the main ones is that if the seller sells subject to or just with straight seller financing, that debt is going to be part of the seller's loan profile going forward. So let's say there's a small mortgage left on the property. Buyer wants to take on that mortgage plus an additional payment to make the seller whole, be happy with the deal, probably come in with a down payment of their own as well, and then take the property for a certain period of time. That's negotiable between the seller and the buyer, and up until that time balloons and a refinance or a sale needs to take place in order to get the seller out entirely. Anything could happen really. And one of those things that could happen is that the seller who is no longer in the property may go looking for a mortgage of their own, but the previous loan could still be on their debt load. Now, if you can prove that someone else is paying that mortgage, you can still move forward, but it's just a bit of a hassle and something that could come up in the future. So you got to disclose that to your seller. There's a couple other pitfalls to look out for and to present to your seller if they have a really good deal otherwise as far as price goes that they are considering moving forward with. One, it could technically be called due. This loan on the property that is being left in place, regardless of the fact that the home is being sold, is technically eligible for a payment in full if the lender decides that they don't like what's taken place and they want the loan called. Another thing to be concerned about is that it can technically be called due with the transfer of ownership in this property. That's something that rarely happens, but it's something to be aware of. And another thing that could happen is that the new buyer could miss payments, which obviously would create headaches and potential credit damage as well. The good thing is that even in a worst case scenario where you actually have to foreclose on the buyer of your property that you are, for all intents and purposes, the bank on, it's actually not a bad thing. I mean, it's going to be a hassle, it's going to be a headache, it's going to be frustrating, but you've already gotten your down payment. You've been collecting monthly payments. That mailbox money is coming in, and now something happens and that buyer isn't making payments. You have the right to foreclose on that property, and however you write that contract up initially dictates how quickly you can move in to take that property back. The cool thing is that in this bad scenario, it could turn out really good because you do not have to return the down payment money that you received in the initial transaction. You do not have to return the mailbox money that you've been receiving that's coming in. You are the lender in this scenario, and you are in your rights to go after that buyer, foreclose on them, take the property back, keep the money you've already received, and either go sell it again or put a tenant in there yourself. The worst case scenario could actually be a real win-win, depending on how you look at it. But before we move on to our last topic of the day, there are a couple other benefits that we'll bring up. You can adjust and kind of manipulate your capital gains taxes that are going to be due because the sale of the property is only one event. There is more money coming in down the road that won't be completed until that balloon payoff period. So the way that you are taxed is going to be looked at differently than in a traditional sale. So that's a positive for your seller. Another benefit is that you can often get a higher sale price than you might be able to with conventional or traditional financing. Because you are being flexible on terms and conditions, you can be inflexible on price and lock in whatever number you really dictate because, as I said, this is all a negotiation. We are doing things a little bit outside the norm, and the seller could really benefit as a result. Now it's time to move on to our last topic of the day. We're talking about a tool called HighNote. This is a piece of tech that we've been using in our office for years now, and after today's mastermind, it seems like a lot of other people are, because this topic came up with a question around the tool HighNote and how to use it to increase your conversion. One of the first things we talked about was how it can be used as a pre-selling tool. So this is a digital tool, and I'll explain what it is first of all. It's basically a very versatile mini web page that you can use to create a link and provide to whoever you're presenting. And what goes in this mini single page document is up to you. You can add files, PDFs, documents, you can add links, you can add all kinds of things, and they all have their own separate little box that they go in. So if you want to communicate to a potential seller the benefits of working with yourself and your team, you can load up a HighNote with various different things, including video, to help color the picture a little bit better of who you are, maybe have some reviews from clients in the past. There's all kinds of different tools. There's all kinds of different assets you can put in this tool and present it to them. Now, the cool thing about HighNote is that it also gives you analytical feedback. So once you send that link off, it may not be looked at for a little bit, but when someone actually does look at it, you're going to get an email, you're going to get a notification, and you're going to be able to see out of the maybe 7 to 10 assets you put in this web page, which one are actually being looked at, and what time did they look at it, and for how long did they look at it. You're getting all of this information. So if you're going into a meeting with a client and you've already given them a great list of things that you do to help sell their homes, maybe you've given them some of your marketing strategy, some CMAs, there's lots of different information that you can pile into this online presentation, and you'll know what they're looking at and for how long. And the cool thing about it is you know what they were looking at and how you can cater your presentation to those things that they've already identified as being important to them. Another great way to take advantage of this is something that I haven't used it for in the past, but it was something I learned this morning. So basically, instead of sending someone a link, You can use it to advertise your listings. So if you've got a retail space for your office with listings in the window, you can put a QR code on the listing directing them to a HighNote, or if you've got a property with a lot of foot traffic, you can put QR codes when people go by it and they can scan it to get more information. And when they do, they're not only going to get information about the property, you can put, like I said, anything you want in this HighNote. So if you want to educate them on what it's like to live in that neighborhood, or give them a few bits of information about yourself, whatever you want to put in this presentation is there in the QR code as soon as they click on it. So that's another great way that you could take advantage of HighNote to lead to more conversion from potential clients, sellers, and buyers. Another great way to help increase conversion by using HighNote is to work on a presentation for prospective sellers as opposed to people that you've already got a listing presentation set for. And so, for example, maybe you've got someone you spoke over the phone. They might be interested in the value of their home, but they're not ready to meet yet and the timing is not right. Well, you can use this HighNote presentation to send them a CMA. You can send them a video. You can send them information about yourself. And you can shoot that over to them before they're ready for that full meeting, and they're going to see that you've actually done work. You've created a report for them surrounding their home's value. You've added other information about what sets you apart. This is going to be a great first introduction to see how professional and how thoughtful you are, because you don't have anything vested in this person so far. They are a prospect. They're not a client yet, but you're treating them like one already, and they're going to feel it. Off-market listings is another way you can take advantage of the HighNote tool. This is another thing that I've got access to, but I have not used in the past. So if you've got a property that is, for one reason or another, not going to be on the MLS, but you want to get it out to as many people as possible, you can set up the information in a HighNote tool. Like I said, you can treat it like a one-page website dedicated to this property. And then you can send out personalized links. We always recommend sending out personalized links. You can generate a separate, unique link for every person that you want to send it to, so that you're getting those analytics on the back end like we talked about. But another thing you can do if you have higher concern for safety and privacy for the content in the HighNote is that you can password protect these links as well. So there's different ways you can gather up your information, you can put it all together in a presentation and share it with specific people instead of trying to blast it out to a bunch of people where you don't know if they're looking at it, you don't know where your information is going, because this is an off-market property that we don't want everyone to have a look at. We only want to target it to certain people. So off-market listings is another great way to use this tool. Another one, if you are in the business of bringing people into your brokerage or recruiting or attracting agents, the same way that we make introductions to buyers and sellers, we can do with realtors, explaining the benefits of our team or our brokerage or whatever the case may be. HighNote is a great tool for that as well. So instead of just wondering, what to tell your clients, you can explain to them, hey, I'll know when they looked at it. Before they even call me, I'm going to have an idea of what's going on. I will keep you updated. And then for your own information, you can see, is it the RPA that they're looking at? Is it the proof of funds? Is it the information about the buyer that you sent over? You know what they've pulled down, what they've spent time looking at, and what they're discussing with their seller. It's a huge help to know what's going on the other side of a transaction. And that is not just when it comes to writing and submitting offers, but in a multitude of ways. So regardless of who you're presenting to, having a really professional, clean, nice looking way to get that information across, and then receiving the information about what they're looking at for how long and when is a huge benefit to you in your business. That's going to wrap it up for today. I hope you have enjoyed our conversation about winning with Google Local Services ads, using creative financing to help you land more listings, and of course leveraging HighNote to increase your conversion. As usual, I'm happy to discuss or answer any questions about any of this. Hit me up right here. Look forward to talking to you soon.